So now I'm going to go through the chart and show you the volume up-down setup. I'll do it on Euro, and for those who are trading futures, I'll also do it on the ES. And first, let me show you how you can set up the volume up-down indicator. So you right-click the chart, you go to Indicators. In here, in this list of available indicators, you'll search for the volume up-down indicator. It is this one. You double-click it, and this is just the standard setting of the indicator. You don't need to change anything in here. Maybe only the width. Alright, so you can set it for wider values, so the bars are wider. But setting this won't change the functionality of the indicator. This is just visual settings. Alright, so this is how the indicator looks like. This is the volume up-down indicator. And let's now have a look at the setup and how it works. So as I said in a previous video, we are looking for significant spikes in volumes, like in here. So in this case, I'm going to draw the flexible profile over this area. The spike which I'm interested in are those 5 candles, and those 2 are extra. One before, one after the volume spike. Alright, this is the volume spike. The volume spike can be like 1, 2 candles, or it can be 4 candles. It doesn't really matter. The important thing is that the volumes are heavier than average volumes around this volume spike. Alright, so let's get back to the chart. This is the profile which I've drawn over this area. Heaviest volumes being in here. So what you do is you draw a line there. Afterwards, you wait for the price to go upwards or downwards from this area. As you can see, it goes downwards. So you wait for a pullback and you go short from there. Alright, that's it. So let's move forward. Let's search for some significant volume spikes. Now, there is one in here. So let's use the profile like this over this area. In this case, heaviest volumes being in here. Price goes downwards from the level, you go short from there. In this case, the price doesn't react to the level, it goes upwards, so this one would be a losing trade. So now there are 2 volume spikes, this one and this one, so let's have a look at the first one first. Heaviest volumes being in here. Price goes upwards from the level, returns back and reacts to it. This one would be a winner. So let's now have a look at this volume spike. So we are interested in those 4 candles, and we'll also draw the profile over this one and this one. Like this. Heaviest volumes being exactly at this level. So we draw the line, wait for the price to go upwards, and now we are waiting for a pullback. This time, losing trade. So there's another significant volume peak in here, those 4. So I'll draw the profile over the area, including 1 bar before, 1 bar after. Heaviest volumes being in here. The price goes below the level, 4 30-minute candles are below the level, so you go short from there with 10 pip profit, 10 pip stop loss. Another winner. Now in here, there is this very significant volume spike, but also if you look at the European session, also those volumes are heavier than the rest, so you can also use those volumes. So let's have a look at this area first. Heaviest volumes being in here. Another nice reaction to the level. So let's now have a look at the second one. So the next volume spike is this one, and actually maybe we can use this whole area because all those candles are heavier than the rest. So I'll use wider area, I'll use it like this, and now the heaviest volumes are in here, so this will be the long level and you go long from there. Let me measure the distance. Yeah, it would be another profit. So this would be a winning trade. So in here, there's nice volume spike right there. So I'll draw the profile over this area. Heaviest volumes being in here. So let's have a look at how the price reacted to the level. This is the reaction to it, but let me see if it was 10 pips, alright? Yeah, it was 12 pips, so this one would be a winning trade. It would be a tight one, but with 10 pip price target, it would be a winner. And now another volume spike is this one, those three. Heaviest volumes being in here, so you wait for a pullback, you go short from there, and this is the reaction. A 13 pip reaction, so this one would also be a winning trade. Now another spike is in here in the Asian session. If you compare it to those volumes or to those volumes, it's not that significant, but if you compare it to those volumes around, it is significant, alright? So because of this, this one is also a level to trade from. In this case, the heaviest volumes are in here. As you can see, the price missed the level and made a reaction to it. So this level would get discarded because of this test, which came a little bit sooner. Next significant volume peak is in here. Heaviest volumes being in here. You wait for a pullback, you go short from there. Unfortunately, there was macro news. This was PMI news on the US dollar, so we are not trading during significant macro news, so there would be no trade. I'm pretty sure that there would be a reaction. The price would react to the level if there wasn't the news. It was a pretty nice level, pretty nice volume spike, but within the news anything can happen, so it's always best to avoid trading during the news. Now another volume spike is in here. Those volumes, heaviest volumes within this area are in here, and the price slowly goes below the level, returns back, so you go short from there. The 10 pip stop loss would get missed by just a tiny bit, like half a pip or a pip, and then there would be a profit. Alright? So this one would be a tight one, but also a profitable one. Now in here, we have volume spike right there and right there. If there's only one candle with volume spike, I prefer to skip it. And I prefer to trade candles where there are two or more. Alright, so I'll skip this one. and I'll look into this volume peak.